Hello, everyone. Welcome to our Embedded Finance panel. I have two amazing guests with me today, and we'll discuss everything around embedded finance, what that is, how it affects the overall financial landscape, and of course, how can you as businesses take advantage of the trending situation that we have over there. So please welcome Adrian Klee, a CEO at ReImagined, a consultancy company supporting businesses and financial service institutions in their digital transformations. And this one is tough for me, so let's try it. Ignacio Javierre, co-founder and CEO of HUBUC, financial services platform that enables brands to open new revenue streams by embedding financial solutions into their products. Ignacio, Adrian, welcome.
Thank you very much, Katerina. Thank you very much also to Adeva to organizing this. It is really a pleasure to be here with all of you.
Yeah, likewise from my side as well. We're really happy to be here and take part in the FinTech ReImagined forum.
Great. So before while I was preparing for this panel, I must admit this topic was a bit new to me, so it was hard to grasp the concept, which turned out to be very simple at the end. But I wanted you to start with a quick introduction so that everyone get familiarized with the concept of embedded finance. Like, what is it? Why should we care about it? And let's try to explain it in very simple terms to our audience.
Well, if I would...
Who wants to start?
Quickly start. Yeah, I think as you mentioned, it's a kind of an abstract topic for normal kind of consumers, I would say. But embedded finance is basically an umbrella term for integrating financial services right when and where you need it. So basically moving financial products, unbundling them, and basically moving them into non-financial contexts, whether that's software like an accounting tool or an e-commerce shop. And then basically helping consumers get done what they want to get done. Like, you know, there's this famous term, banking. Banking is needed, but banks are not really needed. So, and that's basically the gist of embedded finance, that you basically place financial products right at a point of need. Let's say you buy a car and you need a car loan, and the used car platform directly analyzes your bank account statements and your bank transactions and gives you a perfect loan product tailored for your exact situation. That's basically embedded finance.
Yes, I couldn't agree more. Until today, you know, we saw the banks like the place where we could save our money, right? We were using our payment cards were from the bank, right? Our IBAN accounts were from the bank. The credit, we need to meet some guy at the bank, right? Get a mortgage or meet someone at the bank. That concept of having the bank as a silo, as an entity over there that you need to go in order to access financial services, it's being completely, you're getting all those blurred lines because in fact, as Adrian said, those products or services today are being embedded into the brands we all love, right? So it's that capability to start accessing financial services, financial products in the point of need that makes that banks as a place to go in order to get financial services are going to become a thing of the past. Because today we want to access those services in the moment when you are interacting with that specific product or brand.
I really would love to hear about how the banks are adapting and whether, you know, this is somehow a conflicting situation. Are they seeing you as competitors or allies? But before we jump there, can we talk a bit about some examples of companies who are using embedded finance? Or you can also talk about like your clients, what type of companies you usually work with, what are they usually looking for?
Of course, well, we can have multiple examples there. Companies that they are today embedding financial services, we have them, for instance, on our pocket day to day. We have something called Apple Pay or Google Pay, right? Those are, you know, big tech companies. One is related to building computers, then later related to building phones. The other one is about search things online. Well, they are providing you with the availability to pay with your phone, right? So that's an example of how embedding a payment on your day-to-day phone can work. But also you have other examples, like for instance Uber Money. Uber Money, an initiative where Uber drivers can have an Uber account card in order to get paid faster and interact with the brand, right, in a much more close way. And that type of initiative, they are going to increase retention, right, for the customers. At HUBUC, we specifically work with brands in the B2B space. Maybe they are not that much well-known than the retail brands that we all know, but we tend to work with, for instance, accounting management software systems, payroll software systems, tax management companies, travel management companies, vendor payouts companies. Those companies today are offering, their services to their customers through most of the time softwares. And right now, from that software, thanks to HUBUC, they can easily make payments, card issuing, bank accounts a part of their platform. So they can directly, as we were saying at the beginning, in the point of need, offer those services, right? So that's a bit how, in practical, we do. I'd like also to speak, if we are, how the banks, what's the role playing of the banks over there, but I guess that let's make a pause, because from Rose Republic also, the guys are heavily working also within the embedded finance space, and there is a few customers examples that I'm sure that Adrian can help with.
Actually, I want to connect to one point that you mentioned about Uber, which is maybe a really perfect example, even though everyone is using it, but it's just so simple and everyone gets it. You leave the Uber car and you've paid already, so there's no need to get your wallet out, and that's an invisible payment that the product Uber designers have basically integrated into the customer journey to reduce friction, to make it easier for the customer, and that's exactly one point of embedded finance, which is that you use existing data to make a financial product tailored and contextual. So it's not just embedded finance. Doesn't mean you embed a product in the in a way of basically providing a link to a bank and then you apply for a loan there, for example. That's absolutely not the point of embedded finance. It's really leveraging unique data points that you have about your users. Like Uber has tons of data about the users. Likewise, Apple, Google, and so on, and all the other companies that are now jumping on this embedded finance train. And they're really using the data that they have about the users to fundamentally redesign a product and seamlessly integrate financial service. And that means that embedded finance has basically two dimensions. It's either an integrated value proposition. So like Uber Payments, you leave the car and it's paid super easy for the user. And there's obviously a lot of stuff happening in the background. But ultimately, it's also a user pain point. That is part of the user of the value proposition and the experience that Uber provides. At the same time, what Ignacio mentioned, Uber in Mexico provides driver accounts, and that's not something that you as a customer know. But the Uber driver that sits in the car, he gets an account from Uber, which is a quite unusual thing because Uber is obviously not a bank, but they provide that wallet functionality directly in the Uber app. So you get your funds immediately. So you don't need to wait until maybe a few days until the money arrives in your normal bank. So I think there are two dimensions. One is enhancing consumer propositions, which is a massive opportunity happening right now all around the world. And at the same time, it allows companies to really rethink what financial functions mean also within their own operational context. So you don't use your bank accounts by HSBC and the payment functionalities in a siloed way anymore, but you really integrate them into your operations to increase efficiencies, like with Uber providing the accounts for the drivers. Another really awesome example is from the US, from DoorDash. If you live there, you probably know it. They have a lot of delivery drivers. They get you anything to your home, which is an instant commerce business model. And in the US, these drivers pay for their stuff directly at the store, which means there is usually a huge fraud rate if you just give them, credit cards and the driver could buy anything and you don't know if that's really related to an order or not. So they're using basically a provider that allows them to instantly issue virtual cards on the phone directly with the payment, with the payment amount reserved for exactly that order of exactly that customer. So they can only pay the drivers can only pay for that at the specific store and then deliver it. And that obviously has a massive opportunity for DoorDash to make their whole operations more efficient with the drivers. And that's another really nice example of how you can embed payments and virtual cards to make your operations much more efficient.
This last example was very fascinating. I'm trying to draw a line between how much of an existing solution are we using and how much of an adjustment should we make within our app. So, for example, for DoorDash, do they have this functionality to create this virtual card on the phone and just pay with it out of the box, or do they need to work with extending in some way?
Yeah, they work with basically, that's where it gets a little bit complex. They work with tech platforms that allow this, like HUBUC, for example. HUBUC is offering exactly that. So there's obviously a lot of stuff if you're not working in banking, and we're seeing that trend obviously also in our business, where a lot of companies come to us that want to have such embedded banking use cases, but they don't know everything about banking yet. And there's anti-money laundering, as you can imagine. There's a lot of compliance. Banking is, for good reason, heavily regulated. So providers like HUBUC basically abstract all this complexity away. Obviously oversimplifying now, but it's basically abstracted into an API. So you plug into HUBUC APIs and you get an instant availability to launch your own card program or to launch virtual cards. So HUBUC is, for example, offering this, and it sometimes depends. Sometimes companies build out these solutions themselves internally, but obviously it takes way longer. You need to hire a lot of people. You need to build up a lot of internal knowledge about how banking works. And the trend is definitely going towards banking as a service, as it's called. So, borrowing from software as a service, banking as a service, like HUBUC is providing banking features over APIs. And yeah, maybe I'm sure Ignacio has an opinion on that as well.
That's the key. Indeed, that's the key. So, we were discussing before, we need to go to those banks, to those entities, silo entities to get those services. And right now, how is it possible that I can issue a card from, my favorite app, or I can make a payment directly from my accounting management service, or I can, for instance, save money from my travel agency company. So it feels like, magic, how that can happen. Well, you see it in a way as manufacturers and customers. So manufacturers are the banks and customers are those brands who are in contact with the end user. Basically, what we do at HUBUC is to connect those two worlds, right? We act as a distribution channel in the middle that will allow, in a very simple way, for a brand that has nothing to do with financial services to start offering one of those without thinking in, now I need to integrate with Visa, with MasterCard, with a processor of cards, someone that validates the identity of the people, who is going to do the transaction monitoring to keep all of this safe, who is going to print the plastic of the cards, and what about the accounts? How do I have to access the network, SEPA or SWIFT? But now what about the compliance, Do I have to go into jail if someone, makes not a compliant transaction through my app? I am providing the right information to my customers. What about the terms and conditions of all of this? So it can really get quickly complicated for a non-financial institution to try to embed, financial services. Over there, what at HUBUC we have done is that we have already worked on our backend, the integrations and the compliance burden, so our customers do not have to do that. So we do work with banks in our backend, and they are the ones who are providing the safeguarding of the funds, the bank accounts. And on top of that, we have built a whole banking system where we are able to issue cards, process payments, make validation of profiles. We are doing transaction monitoring on behalf of our customers, right? We are really able to white label the whole infrastructure of managing payments, issuing cards, and we put it at the disposal of our customers through an API. What it means is that you can directly create a button on your favorite app, a button that says, issue a card. That button will be connected with our platform, and from there, HUBUC takes care of what happens next, right? So that's a way how we are acting, as this interface between the both worlds, and we are operating in a much more maybe different way on how has been operated until today. As Adrian said, but the concept banking as a service is not new. I mean, the fact that you can access banking capabilities as a service, this is something that has been existing until today. Most of the time, what you found out were regulated entities, most of them with a type of license which was way lower than a bank license, where slapping an API on top of that license and then opening services to the world, right, through API. Now, over here, HUBUC, we have understood that, in fact, it's not about to compete with the banks, but it's about how we're going to work with those banks, right? Because at the end, they have the tier one capabilities that we all love. Possibility to give credit, reliable bank accounts, right, with country codes and safeguarding and deposit guarantees. So we didn't want to lose those capabilities. So we have worked together with our team of engineers to really build that platform that allows those banks to access a distribution channel for them, which is more engaging. They can distribute their products directly to a specific niche of type of customers, and they can do it safely because they're going through our compliance platform, and we pay as well for those services. Now, on the other end, you have a brand that they can embed services, again, in a safe way, but they can do it also with a tier first group of partners. And that's what, for instance, HUBUC allows. We really work on that backend, so the brands out there do not have to bother for that, because that's the key. If we talk about embedded finance, that brand that is embedding the financial services is not going to be a financial services company, right? So why they should start bothering with compliance integrations, right? The easy thing is to put your brand on that specific financial capability and just let it go.
Nice.
How are we doing, Katerina?
Amazing.
This subject of embedded finance.
Yes, and it's super interesting. And we're back to the banks right now. So I think now it's a good time to talk a bit about that part, because banks are, again, key player, and we wouldn't be able to do anything without them. So how are they adapting to this? Because this is challenging their traditional industry. Are they fast to adapt? What challenges do we see over there?
I think Ignacio said again a very important part, which is banks either comply or compete. They don't have that much choices, actually. We mentioned Apple Pay already. We mentioned big tech platform moving into banking, which is happening right now. So what do? You either compete heads on against these big tech giants, and also really fragmented world of finance where any brand suddenly has a card and account offering integrated, which will be very difficult, right? Or you comply, which means you're partnering with, in the case of Goldman Sachs and Apple, that has happened, but obviously that's also not probably a business model that any bank can replicate. Maybe zooming out also a little bit, banks are generally actually in a really bad shape. So they're really busy modernizing their core business. So it takes quite a lot of effort for banks to look left and right what's happening in the market. And embedded finance is obviously something that any bank should actually work on actively in their innovation units to basically build their own future and to have a future in this embedded finance world. But I would say, to your question, like if they're really reacting to this, not really. I mean, some banks are going more and more into embedded finance use cases, but most are still light years away from that kind of reality. Most of them have, I think, the past 10 years basically digitalized their products. A digital account opening or a digital loan application, but that really didn't fundamentally change the business model or the underlying product. And what we're seeing here, what Ignacio mentioned, there is this shift between manufacturing and distribution. So at the one end, you have these highly engaging brands, which are mostly software companies and big platforms. And on the other end of the spectrum, you have the manufacturers, which are the banks, the license holders, which are left with the really complex stuff, which costs a lot, but their revenues basically are squeezed. So they're in a really, really tricky situation when we're talking about incumbent banks. And that will be a very big challenge actually going forward over the next decade to really build out these new business models. And we've seen it in other industries before. And at the moment, that was even before COVID, banks have been one of the worst performing economic sectors ever. So they're right up there with energy and utilities. And so it's actually a really big wake-up call to, if you look at Google and Apple and all these big brands that are integrating finance, to think about what role in the value chain you will play as a bank in the future.
Yeah, that's exactly it.
And for you, like Ignacio, because with HUBUC they're partnering, but at the same time you're basically sitting at a very profitable middle layer because you're connecting banks with brands. So I feel like there's a big split as well in different kinds of brands and different players that are connecting consumers and brands with the banks and compliance platforms and so on. So I think there are really a lot of opportunities in the whole embedded finance space. But unfortunately, the innovation is coming from the brands that are eager to solve customer pain points, because that should be always the first step, obviously. Brands like Uber and others are basically spearheading this. Yeah.
Totally agree. I think that the banks are realizing that they are not the main character in this plot.
Yeah.
The customers, are being put in the really center of that, and therefore all those embedded finance initiatives that will be around that customer will be specific customers. And what those brands will do, or are doing, is something that banks can never do. Banks, they cannot start segmenting their customers and saying, now I have 1,000 customers here, 2,000 customers there, 500,000 customers there that want different product specifications. They just cannot do that. So what we say is let the brands do that, right? The brands know their customers, know how to integrate in the point of need, payments, card payments, QR payments, accounts, so let them do that. Now, just make yourself accessible, right, in order to allow those brands to embed your services. Now, banks, of course, are frightened by that idea, basically because the compliance and the operations and the complexity of letting that happen. The key here, or the puzzle that we are trying to solve, is how we are bringing that comfort to the banks, right? So, hey, just put at your disposal your bank account capability, and HUBUC will do the rest. We are going to do the transaction monitoring. We are going to do the customer persona validation. We're going to do the processing of the payments. We're going to do all of that. But still, you have an important role to play over there. So that's exactly what we are trying to solve over there. The banks need to understand that it's a way also to tap into long-term revenues for them, right? Because it's through embedded finance that then you can maybe quite easily, of course, then do cross-selling or upselling of products. We do have customers that, for instance, they are issuing cards and opening bank accounts through HUBUC platform. But now with the bank, we have sit down and we say, we have a bunch of SMEs connected to our customer, which is an accounting software, right? Accounting management software. And now those SMEs have another pain point that is access credit. Well, through the bank, we can, right, give that credit away. Now, how are we going to do the underwriting process, the risk profile? That's, again, is how we are going to enable those two parts of the value chain, interacting to each other. But again, it's by trying to get together that innovation can happen. And that's the most important of it. Banks will not disappear. Banks will always stay there, but they will stay there as licensed entities, right? What we will see is brands that they will become fintechs, and that's going to be the way. And then brands like HUBUC that will, be dealing with the burden of enabling a brand to become a fintech, which is dealing with all the infrastructure and all the compliance that goes with that.
Right.
Maybe just one example to make all of that a little bit more tangible as well is one of my favorite embedded finance examples is also coming from Germany. There's sorry, I need to check the right so that I don't call out the wrong brand, but it's called Lieferando. It's part of the Just Eat Takeaway group, so a food delivery platform which has thousands of merchants, restaurants on the platform, and Lieferando knows a lot of stuff about these restaurants. They know exactly how much revenue they make, how many online orders they get, how many reviews they get. So they know quite a lot about each individual business. And if you're a restaurant on a platform and you would like to get a growth loan, for buying new furniture or whatever, or hiring new staff, then usually you need to print out your bank statements and go to your bank and ask for a loan, and then you maybe get an answer in a month. And what's happening now is there are new banking as a service providers in Germany. One of them is called Banksware, which is basically connecting and plugging into the platform data of Lieferando. They're basically seeing all the transactions, and the merchants on the platform can then click on a button and ask for a loan, and they get a tailored loan product based on the revenue that they make on this platform. So it's an instant loan decision. And what has happened is basically that banks were in the middle, that fintech that enables all of this is not funding this with their own money. They have banks plugged in the background, and they got 100 million just from one bank to lend out to over these platform business models, because banks just don't have the infrastructure, the business model, and like that nothing exists today that allows them to lend in such a way to SMEs in this case. And there you can really see how the landscape is evolving, that banks are kind of pushed into the back end to be a manufacturer of a loan product, and they have the money, but they don't have really, they're losing the distribution channels into the market, both on the consumer side and on the business side. And there's really a huge appetite of all kinds of businesses to look at exactly these type of solutions to really help their merchant base. For example, we see it with Shopify as well, and QuickBooks, so in e-commerce and accounting software, to use the data that you have and basically analyze it smartly and then provide you with the perfect financial product. And of course, the banks are in the background, but they, at the moment, don't have the cost base to just be that balance sheet provider in the back end, because they still have to deal with a lot of tech debt and a lot of operational debt, which costs them a lot. So it will be interesting to see how it plays out, and definitely for sure there's a wave of consolidation coming. So a lot of banks will be probably either adapt or die or get bought, and then you will have a huge wave of fintech companies as enablers like HUBUC.
Well, I think that one of the key also points of success for this to really become a huge trend across is that also the consumers get a demanding, right? When you get a payment done through an app, or you get a bank account through an app, ask yourself or ask your brand, where is that bank account coming from, right? Is it a foreign country bank account that you've never heard of, or it's a local based bank account supported by a well-known bank in your country, right? So also consumers have power over there to really make a difference. Is what, for instance, at HUBUC we are doing, right? We only partner with local banks that we know that they can also securely put at disposal of the customers those types of services. Because bottom line, in the space also that we specifically work in B2B, where also you have huge volumes in terms of payments, you need also that security for the customers. And we need to keep investing on compliance and security so we can incentivize those end users, those customers, to really see that it is okay to use those in context financial services, right? And only by trusting also your local entities, the ones that has been already doing for all that time, the risk analysis and the controls of those accounts, is how it's going to work. So we believe that the important thing is how we're going to enable those banks, right, to go into the transition. When for instance, we sit with a bank, and sometimes we explain them that we can increase by 30% the number of payments that they actually are doing. they kind of do not really understand why. And then we lay down the use cases that we do with our customers, and then they understand. They understand that there are over there an opportunity that they have been not tapping on, right? And they can access that potential. So I believe that by having also those conversations with the banks, and by having a more and more demanding customer, right, that ask for a product which is reliable, secure, compliant, this transition will happen more naturally than we think.
That was an amazing way to explain all of this, and I love the example as well about the lending, because it really puts everything in perspective. And I guess it's just the same as with any disruption on a market. You either adapt or you die off, as Adrian said before. So if you adapt, you will grow, and you will utilize the trends that are happening in your industry, or otherwise just run out of business.
We are not getting back into the past for sure. For instance, now we have at HUBUC more and more customers that they do not require physical cards anymore. What they want are cards that are virtual, so they are able to issue a card instantaneously, use it, but not only online, also in their phones, right? So, for instance, we are developing a couple of projects with two major banks in Europe, and we are just helping them to interact with embedded finance type of use cases. And HUBUC is taking the hit on how to implement the Apple Pay or the Google Pay, right? But at the end, that's what a customer will demand. If you're not able to provide those type of virtual cards to introduce into the phones, that customer is not going to be interested in your card issuing, capability, because at the end, that's all what it takes. Embedded finance, right? Really be at the point of need. So indeed, it's either adapt or not adapt. But yeah, let me tell you,
it's their choice.
It's their choice. But what we see so far is that when you put the evidence in front of them, they are quite collaborative, because customers are really demanding that, and we've seen that. On the B2C space for a while already, and in the fintech space, you have N26 or Revoluts, right, of this world. They really have shown to everyone that another type of banking is possible. Now, this is exactly coming now to the B2B space, and it's amazing, right, how B2B brands are now becoming fintech, and we can enable them to do that. So yeah, it's fantastic.
It is. Great. And in terms of going back to customer demand and utilizing embedded finance, with the COVID pandemic, we've seen huge digitization in every space. Did you notice some trends, maybe in the companies you work with, or in general, what has been provoked by the situation we're in?
Yeah, I think it has accelerated a lot of the trends that have been there before. So we've been working a lot also on B2B use cases in embedded finance. And during the pandemic, obviously, also smaller businesses have basically were forced to offer also digital channels and digital platforms, went into e-commerce solutions and digital tools. So for me, that was also a big sign that even in the business and small business banking space, there's a big shift coming when it comes to embedded finance, because smaller businesses use different types of virtual or digital tools on a daily basis. And they are also demanding to have banking functionalities right there when they use it. For example, there are a lot of accounting providers that have an amazing amount of data about their users, and can use that basically to underwrite a credit, for example, whether they're offering an API to do that for banks as an attractive feature, or actually team up with, like in the banks, for example, team up with fintechs to actually give out loans to their customer base. So that's definitely a trend that I've seen, where basically small business software solutions are anyways already the now new standard for business owners or for smaller businesses, and they are also demanding integrated financial features. So that's definitely a trend that I've seen from my side, but you can see it in the consumer context as well. Everything has moved digital, everything has moved into e-commerce. I think Klarna, which offers an amazing buy now pay later checkout experience, is now at over 90 million active users. Apple Pay has over I think 380 million users. So it's it's really a huge trend that has been accelerated, where users maybe have used these services for the first time or just more often than before, and now it became really sticky. I think that has happened on the demand side and also on the supply side. If you're a software company or if you're basically a big retailer serving a lot of customers and you have a lot of data about them, then the business case behind offering integrated financial features is just very, very big. So in some instances, you can really increase the revenue per users up to 5-fold, and it opens up a huge new market for yourself as a provider. And since during or after the pandemic, now the digital behavior has increased and accelerated, it's definitely there to stay. Cash has been in decline. There are a lot more bank-to-bank payments or card payments now. So this has really unleashed a new wave of consumers to understand that there are more options than just the traditional banking model, but also on the supply side, where B2C and B2B software providers have understood that they can actually really smartly integrate financial features to solve pain points of their own customer base.
Agree. I think that over there, Adrian, you're really spot on a few concepts, which is exactly what happened. I mean, we have all gone through a very hard time during the coming pandemic. I mean, it has hit us very hard on personal levels, but of course, professional levels as well. And I do think if we look at the bright side of it, that has been an incredible opportunity for companies to accept that revenues are going to decline for the next quarter, right? That a customer base is not going to increase for the next quarter or two, to accept that some suppliers are going to take more time to pay you. But then what you can do with that, right? Well, you can focus on your product, improve it, and go out stronger when this is out, right? When this pandemic is out, which right now, everything feels that we are really able to get again into a pace, where business again, is possible, and etc. So we've seen that, and we've seen therefore when brands and companies has turned into what can I do with my product to get out stronger. That embedded finance has been one of the main topics. Embedded finance is extremely related to digitalization, as Adrian pointed out. So therefore, since we are already in a trend of digitalization, whatever you want, in every step of the value chain, embedded finance, it is a topic of discussion. And the fact that companies have now found out how easily it can get to embed financial services because there is someone else to take care on the dirty stuff, like building the infrastructure, making the integrations happen, and dealing with the compliance, they have been really looking into that space. And we've seen an acceleration of initiative in the embedded finance space. But because what we have perceived is that rationale on how I'm going to generate new sources of revenue after this pandemic, right? How I'm going to harvest the data that we have now at hand, how I'm going to serve better my customers, how I'm going to increase my defensibility as a brand. I think that all of those questions that have arise from a crisis moment, they can now bring light, or they can empower an innovation, right? So if that's something that it's a potential outcome of this moment that we have lived, it can be also positive, an outcome that has speed up the process of digitalization and, of course, embedded finance.
Yeah, I fully agree. I mean, it's definitely, and obviously there have been many studies about this, that the pandemic has accelerated a lot of the trends that have been there before. And I think the key trend is really digitalization, and everything that can become digital is now already digital. So the next step is definitely what Ignacio mentioned, that more and more brands are thinking about how to make the life of the customer easier. But at the same time, I think it's twofold. You can really increase the customer experience by embedding finance, and at the same time increase your own revenue per user. So that's obviously win-win in the best case.
Okay, so we have the brands on one side who are rapidly moving into digitization and utilizing embedded finance. We have the companies such as yourselves that are providing these services and option for them, and then the banks on the other side that are completing the landscape. So how can all of them leverage the opportunity of embedded finance, and what are some pitfalls to avoid?
I have.
Well,
yeah.
Go ahead, Adrian. Go ahead.
Yeah, I think well, we touched on many topics, and it's just embedded finance is really this umbrella term of a lot of things that are going on at the same time. I think I would for any business that looks into embedding finance, I would definitely recommend to start with the consumer first, because this is exactly the innovation that is happening right now, where banks in the past have just created products and pushed them to the market through the banking apps or through the branches, and that kind of linear business model is over. So really thinking about worthwhile customer pain points to solve, and this can get really creative. So we have only seen the tip of the iceberg, and we haven't seen the real potential of embedded finance, I guess. So really thinking about what user pain points you want to solve, whether that's an internal customer like the DoorDash drivers versus an external customer like the Lieferando merchants. What pain points do they have, and how can I integrate financial features to really solve that? And then secondly, what products do I need to really integrate and to leverage based on my own data? And then it really opens up a huge world. You can work directly with banks. Some banks are offering this. You can work with banking as a service providers like HUBUC. You can build it internally if you want to go down that route. In some cases, you need to get your own licensing in place and your own internal, compliance people and so on. So it's obviously the more costly path. But that's I guess where this whole landscape comes in. You now have the amazing opportunity to go to banking as a service providers that abstract the complexity away. They are kind of the middle layer between the brands that serve consumers and the banks in the background. And then for the banks, it means they need completely new partnering capabilities, right? So they need to have API first capabilities. They need to go into the cloud and so on. So that are at the same time massive technological implications as well. But so I would guess for incumbent banks, it would mean to really open up new distribution channels and maybe new risk models as well in terms of delivering the products and basically the money that they have based on the balance sheets through new channels, and really actively reach out to banking as a service providers like HUBUC that are basically the pipes and the connectors, the bridges between the traditional banks and any brand that wants to integrate a financial feature, basically. So that's how I would basically describe the whole ecosystem. But ultimately, it either comes directly from a customer insight or market pull that then triggers this whole process, I would say.
Yes, I think it's basically first listen to your customers, right? So to any brand or company out there, listen to your customers. Are they experiencing problems on reconciliating payments? Do they spend too much time on going to the bank and make payments? Could they benefit from an integrated card that can manage expenses for them, right? Or can manage taxes? So really put on the shoes of your customer to understand how you can tackle those pain points and listen to them. Now, once you have identified the pain points, quickly deliver the product, right, that can solve them. So do not think for a second that you have 5 or 6 months to develop that solution to tackle that specific pain point. No, if you can launch it within a week, better than within a month, right? And here is when I believe companies like HUBUC or others, we can help over there, because it's not really about again you as a brand or a company, but more as your end customer now. So what you want to put is a product, a viable product in the hands of those customers, so you can start getting that feedback from them, right? So over there, I could really encourage any brand and company out there to try it out, right? To listen first, find the pain points, but then do not spend that many time on thinking, should I go or not go? Just go, right? Nowadays, you have the possibility to do it with a very low entry barriers in terms of cost, complexity, right, regulatory purposes, because others we are taking care of that. So just there to launch it, because what you can find out is way more than maybe you even expect, right? So I that's what I would say, right? Just there to go out there, identify the pain points, and launch that product that will make the whole experience of your brand better for your customers.
I think this is a great way to wrap up this discussion. I really enjoyed the topic, discussing with you too. I mean, you're obviously very knowledgeable about it, and I hope everyone else managed to grasp some new insights from this. Thanks to everyone who attended. Ignacio, Adrian, thank you very much for being my guests. If you have any final thoughts, feel free to share them. Otherwise, we can wrap here.
Thank you, Adrian. It was a pleasure, as always. And Katerina, thank you very much as well, because I did learn on this conversation with you guys. So thank you also, Adeva, for inviting us. And it was really a pleasure to share this talk with you.
Likewise, also from my side, it's a really exciting topic. I think, we could probably talk for hours about this, but it's amazing maybe to show to the listeners today that it's something to for any brand to have on the radar, whether you're a bank, fintech, or software company. So it's amazing time to really look into opportunities in embedded finance. So thanks, Katerina and Ignacio. Has been a pleasure.
And the pleasure is mine. Cool. Thank you, everyone. Bye.
Thank you. Bye-bye. Bye.